Hello, welcome to Wanderer Financial. Now, today I want to talk to you about 2B indicator. It's a chart setup that we like to keep an eye on. At 2B, it indicates a change in the reversal in the direction of a trend. It often does, anyways. It's something we keep an eye on. We use it to mix in with some other indicators and as additional confirmation that things have changed. It's easiest to see just to take a look at a chart, and I'll show you what it means. So we're looking here at AMD. You can see the stock rallied up here and came back down, trending down for a while, bottomed out here at 1617, bounced, and then came back down. Now here's where the 2B occurs. What happens is here at the bottom, the stock just goes through this previous low. So here the low was 1603, so it dropped through by 14 cents, but then it settled back up above the line for the day. Okay, so it settled back above the previous low for the day. Technically, we look for is the next day we look to enter the trade. So in this case, we'd be looking to go long the next morning. Stock opened up here. You'd wait a few minutes during the open to kind of make sure that this didn't just fail right away. That's kind of what you're looking for, is to make sure that this is confirmed. So the stock held up, you'd buy up here, and then you can see you had a nice run if you stuck with it. These also happen, of course, at the tops. So this rally went on and on and on. Then we saw a high here where it just exceeded this September high. So this high was at 34.14. Then this day popped up. We got a high of 34.30, and then it settled for the day. It closed for the day at 33.23, so well back below the line. Next morning again, it opened up right here. Everything looks good. You'd enter the trade short, and this one didn't last as long, but you can see how this high marked the top there, and it was confirmed by the 2B. Let's take a look at some other examples. Let's look at Ford. So Ford, this one just recently had a high in May of 1050. Stock dropped back down to the low 9s, and then it popped back up again. See, this day the high was 1050 again. So this first day, this wasn't a 2B. It matched the previous high, but it didn't exceed it. The next day, then, it did exceed the high, went up to 1056 before dropping down again and closing at 1042. Okay, so now we've got our 2B. We're going to wait until the next morning for confirmation. You can see the stock opened here, rallied up a bit, but it didn't exceed this high. So you may have entered at some point this day, right around here, 1040, 1045. Okay, and then eventually the stock started dropping again, and you're getting a nice move now off the 2B. What we generally do is if we enter a trade here, so we'd enter short Ford here. Our stop would be if this high was then exceeded. Okay, so the spike that went through the previous high made its high at 1056. I would have put the stop at about 1060 on that one. Okay, so we'd enter here at 1045. We don't only have about 1.5% risk, to 1060-ish up here, which would just exceed this high. So basically, when the stock is putting in a 2B, what it's doing is the stock has run back up, but it's starting to run out of energy. So it makes this last push. It pops through a high where it's going to trigger some stops. But when it can't follow through, it'll quickly drop back down like it did this day. Next morning, if their buyers don't show up, then you're feeling rather confident at that point that the run is over and the trend is gonna reverse. Okay, so that's what we're seeing there. Let's look at some more. Oracle. Let's see, what do we have here? So Oracle was back a ways. You can see how this one worked out real nicely. There was a low back here in June. The low was 42.57. Stock rallied back up to 52 and spent some time, came back down. And then I'll zoom in here a little bit closer. So then you can see it almost got there this day, didn't make it. Next morning or the next day, it popped down through. So we got our move through the previous low here. So 42.57. We dropped back down. We dropped lower to 42.40, but then settled for the day well back above it. Next morning, you're opened around here. So you would look for an entry around whatever 44.30. Okay. At that point, your stop then would be just below this low, the 2B low, which was 42.40. So you'd have a stop down around 42.30, somewhere in there. If the rally failed and the 2B failed, you would consider it busted when the stock fell back below here. All right, so you can see how well this one worked. Oracle really rallied. Nothing to shake you out on the way up, really. So that was a nice trade. Nice thing with these 2Bs is when they do stop you out, it tends to be for small percentages. You can catch a nice reversal, nice trending moves. But if they do fail, it's generally for a very small percentage because you're getting so close to a bottom or a top. Bank of America, this one's had a few different 2Bs. Let's see, what do we have here? We got, let me delete this line. So we came up here, made a high, came back down, low here at 26.60. Nice rally, came back down. Now we've got we broke the 26.60, broke this low. Now this is interesting because you can see how it broke the low, but it didn't settle back above on this day. So this one closed at 26.60, closed right on the line, or right a penny below the line still. So the next morning, you got a little bit lower low, and now you've got the 2B in place. Okay, now this day that settled at 26.68, back above the line. So now the 2B is confirmed. Unfortunately for you, maybe the next day it kind of gapped up, so maybe your entry wasn't until, what is that, 27.36, 27.30. So you get in there. You can see this one did follow through and moved up nicely. Again, if we entered here at 27.30, the stop would have been below this low of 26.40. Let's see, what else do we have? Let's look at low. So here on low, we had a lows. I'm sorry, we had a high up here at 117.70. Big drop down, big rally up again, and so this day we got the breakthrough on this. Zoom in a little bit here. We got the breakthrough the high here on this day. We got up to 117.94, so we just broke it and then settled back down below. Okay, the next morning we'd be looking for an entry. Delete this one, get that out of the way. Next morning we would have been looking for an entry. In this case, what happened then is that the stock did end up moving back above the high of the day before. It's kind of tricky. It's hard to know now what exactly would have happened. What was the high here? 117.94, and this high was 118.23. It's only about 25 cents. So I may or may not have stopped you out. If not, you can see you had a really nice rundown. So again, if the stop is going to be above this high, that's really all there is to it. So basically, these 2Bs, you're looking for these nice V tops or V bottoms. They put in a nice obvious top or bottom. Stock trends the other way, and then it trends back and comes back and tests that level again. That level gets broken, buyers or sellers fizzle out, and the trend reverses again. And that's really all there is to it. It gets you in nice and close to a top or bottom, and you can also use it to combine with other things. In our case, we often use our indicator, which is moving average cross. So we'd have a nice 2B here. It would drop down, and at this day we'd get our indicator to short. That would have been a nice entry, just coming down below the 20. And you can see we got a decent move there. Anyways, I could go through a whole bunch of different charts and keep showing them, but that gives you a good idea of what a 2B is and how we use it. And I hope that helps. Thanks for listening. Thanks for watching. Don't forget to subscribe.